Did you know that you can earn income by lending to your own government? Yes, this is possible through what we call investing in either treasury bills or in treasury bonds. So in this video, I'm going to highlight 4 key points. And the first one would be us to understand what are treasury bills and bonds. Then also, what is the process of investing in treasury bills and bonds? And what are the advantages, the disadvantages? And then finally, how can you grow wealth by building or by investing in treasury bonds? So when it comes to treasury bills and bonds, the differences are very basic. Treasury bills, this is when you lend the government for a shorter period of time. And this can be either 3 months, 6 months, or at least 1 year. Then on the other hand, treasury bonds, this is when you lend the government for a longer period of time. This can be either 2 years, 3 years, 5 years, 10 years, 15 years, 20 years, and some countries you can lend even beyond 20 years. But the good news when it comes to treasury bonds, for them, they pay interest twice every year. So after 6 months, the government will be paying you half of the interest for the rest of the bond period. And on maturity, the government will refund the principal that you invested in that specific bond. But as always, it's good also to understand that there is a specific process when you want to start investing in treasury bills and bonds. And for this specific video, I will use a Ugandan context. The first one, you will need to have a bank account with a local commercial bank. And then secondly, you also need to have an account with the central bank. But in this case, the account must be opened through your commercial bank. And once that account is opened, you'll be ready to transact. Now, when it comes to transacting, there are generally 2 markets that you need to go through. There's what we call the primary market, and this is when the central bank issues the treasury bills and bonds to the general public for the first time. While on the other side is the secondary market, and this is a bigger market because this is where all investors who have ever bought treasury bills and bonds can sell them to other investors. At the end of the day, I always prefer that you invest in treasury bonds because bonds give you 2 things. The first one is the fact that they pay interest twice every year, but also they usually give higher interest compared to treasury bills. But also, the longer the maturity period, the better the advantages, specifically 2 advantages. First, they always attract higher interest rate, but also if you come to a Ugandan context, they attract a lower withholding tax of just 10%. Because if you can remember that for any bonds that are below 10 years maturity period, they always attract 20% withholding tax, while those that are 10 and above, they attract only 10% withholding tax. Now that takes us to the advantages and the disadvantages. For the treasury bills and bonds, one of the biggest advantages is the fact that the income is extremely predictable because you will know exactly when you'll be paid. That way you can easily plan for your cash flow because there is nothing better than being 100% sure that on such and such a date, I'll be receiving this specific income. Then the second advantage is the fact that they are generally safe investments because all around the world, governments rarely default on their local loans. Because remember, when they issue local loans, they're issuing them in local currencies. So the worst case scenario, if they can't raise enough revenue to pay off, they can always print new money. However, they rarely do that because that can also cause more problems, especially inflation. Then the third advantage is the fact that they allow you to diversify your portfolio. If you have other investments, let me say you have invested in real estate or you have a business, now investing in treasury bills and bonds gives you that other layer of another new investment. So that way, at least you're spreading your eggs other than keeping them in one basket. And then finally is the tax advantage. In some countries, the interest earned on treasury bills and bonds attracts zero tax. While in other countries, for example, in Uganda, sometimes the tax that is charged on those incomes or on the interest earned in treasury bills and bonds is slightly lower than if you had invested in another investment. So that takes us to the disadvantages, and I will specifically cover 2. The first one is inflation. Now, if a time comes and the inflation rate is higher than the interest rate that is being paid on either the treasury bills or bonds, then you're highly likely headed for disaster, because it will imply that the future purchasing power of the money that the government is going to be paying you will drastically be reduced. In simple terms, what that money would buy in the future, unfortunately, you can buy something better today. And then the other disadvantage would be the fact that it has low returns. Because remember, economics, the higher the risk, the higher the return. The lower the risk, the lower the return. So the fact that the government treasury bonds and bills are extremely low risk, that also implies they attract a lower return, especially if you compare it with other kind of investments. For example, if you are interested in businesses, highly likely, if you invested in businesses, you will have a better return. So that's one of the biggest disadvantages, the fact that they have a lower return. But remember, it is predictable and it is very safe. But now, assuming you have decided indeed now to invest in treasury bills and bonds, how do you make sure that you grow the wealth by only investing in your treasury bills and bonds? The key one is to make sure that you compound the treasury bills and bonds. How do you do that? Is to reinvest the interest you're earning by buying or by investing in more treasury bills and bonds all around the world. That's the biggest one of the other disadvantages of treasury bills and bonds, that they don't compound automatically. Because when the government pays you the interest, it pays it into your bank account. So it's up to you to make sure that you get that money and you reinvest by buying more bonds. Otherwise, most of us, again, we might just spend the money on consumption. But if you want to grow the money by investing in treasury bills and bonds, make sure that the money compounds. And the only way it can compound is by you getting the interest the government has paid you and invest it by buying more treasury bonds. But at the end of the day, if you want to grow your wealth, it's always advisable that you diversify your portfolio, because trust me, putting all of your eggs in one basket is extremely dangerous. And to do that, you just need to do some research and then choose the best ventures you can put your money in. You can either look at stocks, index funds, mutual funds, or businesses. But bottom line, it's always good to first do as much research as possible, then decide which investments you want to start. However, just one word of wisdom, the last one, to the younger people out there, please, the earlier you choose to start investing, the better, because once you start early, you can always be assured that time will always work in your favor.